Another taco day. Gotta love the tacos. Welcome on in. So today is day 2 of the Trumpy Wumpy taco. Now, typically, day 2 is not as hot as the first day of a Trump taco event. And so we did end up having a revisit to 617 this morning, which is really interesting. This morning in our Alpha report, we talked about a potential revisit to 617 and how that could be a playable bounce because it's the second day of the Trump taco. We did get within 78 cents of that 617 line. But what I'd like to broadly pay attention to is, really a stock like Microsoft. We were touching on this a little bit this morning, but, Microsoft is down almost in correction territory. They're almost down 20% since its peak. And it's really quite remarkable that a stock like Microsoft is down 20%. And it does sort of beg the question, what's going on with some of these mega caps that have peaked out and are really struggling to regain some of these levels? So, we had a peak out on Tesla in December. We had a peak out in Microsoft in, it looks like, July and October. Netflix has obviously been on a disgusting downtrend since June. Let's look at some of the other ones. Let's go Meta. Meta's been on a downtrend since August. Google is the only one really holding up. They're doing really well. Let's look at something like a Salesforce. Salesforce can't keep it up. You don't even want to look at like Figma or Adobe. Figma, since its IPO, just slightly less than 6 months ago, has lost over 82% of its value. Gone. You look at something like Wealthfront. Wealthfront just dropped, 40% from their IPO high? I mean, this is insane. Some of these companies are actually really good companies, and they're just struggling. They're peaking out. I mean, let's look at another one. Even Nvidia, to some extent, peaked out in October, and it's been stuck, and it's got some of the largest pricing power out of really any company that exists. Excuse me. You look at, let's look at some of the other large names here. Let's see, what's another one? I mean, not particularly large, but Robinhood's peaked out. That's another one to pay attention to. Obviously, we know Bitcoin's peaked out. I mean, got another chance to buy it under $90,000. It's kind of fascinating that a lot of these really big names have somewhat just petered out over the last few months. Costco's seeing a little bit of a revival. This is in part because at the beginning of the year, we saw a lot of, how would I phrase it? A lot of consumer retail stocks come back, which is pretty impressive. Then let's see here. We've got, consumer retail. Another one of those would be like Target. Target's had a bit of a rebound so far since about December. Around Black Friday, you kind of petered out on the lows on that one. Target, another one. Let's check out Best Buy. How's Best Buy doing? Best Buy, still a little bit of a downtrend. Walmart got into the NASDAQ 100. So you've got this sort of rejiggering a little bit of leadership where some of these retail players, consumer retail players, are doing much better than some of the big money producers. I find that somewhat surprising. I find it surprising that a company like Microsoft or Nvidia, like these companies are selling with lower valuations relative to what we're typically used to. And names like, Walmart, Costco, Target, Dave & Buster's or whatever with much more, certainly Dave & Buster's, much more, even Target, much more fragile numbers are actually doing much better than a name like Microsoft or Nvidia right now. And those are much higher quality companies. So I think it's somewhat surprising, some of this behavior in markets. Enphase, for example, is up 10% today. We were talking about this a little bit this morning with their TPO program. or they're getting into allocating resources to leasing contracts, which I personally find less desirable because those are usually lower margin products. But they're doing it. And, their stock bottomed out at about $25. They're certainly very cheap. I mean, they've been under a one peg for a while. But the problem is their growth expectations keep going down. That's not great. So, okay. Hold on a sec. Here, give me a second.
They love it. I love that they love it. This is why you get Omaha Steaks.
Right now, get 4 USDA certified tender steaks free when you visit omahasteaks.com/tender.
Skip the grocery store and
skip the grocery store and get Omaha Steaks today.
On 48-hour shifts, calls don't really care if you're eating, if you're trying to sleep, or if you're working out. Before AG1, I was having some trouble maintaining consistency. My energy was low. And now the biggest change I've noticed is having maintained energy levels. I feel good from morning till night. I've been in the fire service for over 20 years, and without the resiliency and having a well-established routine, I don't think I would have made it this far.
The story begins in ancient Greece and travels across oceans, across mountains, across time. The hero's journey, facing trials, persevering against all odds. An epic quest to fulfill one's destiny has led here to northern Italy, where the story continues at the 25th Olympic Winter Games.
Welcome back. Getting some news this hour on Target, the company appointing 2 new directors to its board. John Hoke is the former chief innovation officer at Nike, who spent more than 3 decades there. And then Steve Bixby is the former...
Sorry about that. Had to explain a little condensate line problem we're having, and I totally forgot that they were coming at this time. So I apologize about that. But it's okay. So anyway, I do think, what's happening in the market right now is weird with some of these high quality names that are really selling kind of cheap. And one of the things that we find too is, momentum is so wildly strong right now. And I think post-COVID, it's gotten even worse. I shouldn't say worse, but it's just something that's more, something to pay attention to. When a stock's going up, it keeps going up, right? And the valuations go loony. But when a stock goes down, it just keeps going down. I think Netflix is a fantastic example of that. Do they deserve this punishment? No. For the Warner Brothers deal, which I actually think long-term will be really valuable. But there's no floor. When the momentum goes bad, nobody wants to buy a stock that's going down, right? I mean, it's the same thing with Wealthfront or Figma. Dude, nobody wants to buy a stock that's going down. So I tell you, it's weird, man. I don't know. It's bizarre. Obviously then there's all this, the Trump stuff is just sort of like a sideshow. I actually think usually the Trump stuff just creates buy the dip opportunities. But I will say it's quite bizarre. And one of the reasons, and I hate to say it because I was looking at, so I've got this extra $1 million that I'm like, what am I going to do with this, right? And obviously, you already know that I decided to allocate it to HouseHack. But, I was also like, all right, should I take originally I was going to be like, I'll just put $900,000 into stocks and $100K into HouseHack was my thought. And I'm like, based on the fact that, we're this is not a pitch for you. It was through my mentality, based on the fact that right now I could buy basically my own shares at, $1.40, which is the valuation from August of 2024. I feel like I'm buying at an August 2024 valuation where we weren't selling AI, or we didn't have all the amazing plans coming down the pike that we have going, not just with the developer team, but also, other things. I look at it and I'm like, man, it's like, why would I not allocate to that right now when really good fundamental companies like Microsoft, and I hate Microsoft. I don't own Microsoft. I hate Microsoft because I think they're a cash grab. But they're so profitable, dude. Oh my gosh. You realize the margins at Microsoft. I was talking about this a little bit this morning in the course member live stream, but I didn't pull them up. Let me pull this up because we were doing fundamentals on something else. But let's just pull up the fundamentals really quick on Microsoft. Dude, like, they're so good. These are like the most, like, you have basically zero bankruptcy risk at a company like Microsoft for the very long foreseeable future. You have, how come I can't pull up? Oh, please, no. Do I have to pull it up as a Word doc? That would be terrible. I don't know why this isn't loading. Yeah, I can't load their PDF. That's hilarious. I'm going to have to pull it up as a Word doc or an HTML. There we go. I'll just pull it up as HTML. But anyway, you have this massive high margin business. I just want you to look at the margins on this company, okay? So look at this for a moment. The revenue, here, they calculate the gross margin for you. I don't even have to take out the calculator. Their gross margin right here is $53 billion in 2025 for 3 months. In 3 months, they generate $53 billion of gross margin. Do you know how much money they collected? 53.6 was the gross margin. They collected 77.6. Dude, 69% gross margin. What the hell? A company that literally takes 69 cents to, their operating level, gross margin. Like Tesla's gross margin is like 15%. Microsoft's gross margin is 69%. And it's down 20% from the peak? What? Like, it blows my mind. So I do think it's very strange. Like, there's something going on that's weird. I don't know what it is. Somebody says, didn't Elon say OpenAI would eat Microsoft alive? Oh, with losses. Well, that's a reference to OpenAI losing money, and Elon hates OpenAI. That's just Elon being Elon. But I do think it's quite remarkable because when you look at the fundamentals of a company like Microsoft, they're so glorious, and the company's cheap. I mean, if I go to the Meet Kevin Microsoft tab, I've got Microsoft. I'll just shout this out to you, okay? Microsoft, I got it at a 1.64 peg. That's cheap. That means it's got, 1.64 peg. To me, Microsoft has 64% upside. 64% upside. It's crazy. Amazon's trading for a 1.8 peg, so that's going to have like a 50% upside. You look at NVIDIA. NVIDIA has also about a 64% upside. You look at a company like Meta. Meta. Where's this puppy? Meta. 1.2. Meta's got a double in terms of upside. So it's like, it's crazy. Just to look at Mags versus IWM. No, I get it. I know what you're saying. It's the money is going into small caps. I understand. But that's retarded. That's my point. It's like, that's dumb. You got to remember, small caps, that's the high risk for interest rates. The big money, the Microsofts, they make money when interest rates go up. Small caps lose money when interest rates go up. Dude, look at the 10-year treasury, bro. It's up again today at 4.27. This is insane to me. Gold is up again. Bro, day 2 of stale tacos, and gold is still up, bro. What the hell? That's what I'm saying. Riddle me that, okay? So let's write this down just because it's bizarre, okay? And I think just being transparent about the bizarreness is great, is good to do. Microsoft is essentially in correction territory, down 20%, with 69% gross margins, okay? Then you've got small caps are rallying, how should you say? Small caps are rallying like interest rates are zero. Treasuries are up at the highest level we've seen in 3 to 6 months, right? Like we have stagflation, right? Treasury yields, I could say. Treasury yields are rallying up like we have stagflation. So small caps are rallying like interest rates are zero. Microsoft is in correction, down 20% as if we're in recession, okay? Gold and silver are rallying like we're at war. All right? Like what? Like, no, none of this makes sense, right? Oil has been trending down, and so have rig counts, as if we're in recession. And memory stocks are rallying like we just discovered AGI, and data centers crashed like the bubble just popped. Let's just fact check that really quick. They did come back a little bit. Yeah, they've come back, right? But they've definitely come off their peak a lot. Iron's not that bad. All right, so like the bubble's popping, I should say. Data center stocks dumped like the bubble's popping. There we go. You see what I'm saying? So forgive me. It's not a pitch, but I'm like, so what the fuck? That I decided I'm putting the extra 1 mil cash available into HouseHack. Again, I'm not trying to pitch it. I'm just saying, what? Weird, right? So trying to make sense of it all is bizarre. Somebody says it makes perfect sense if you consider Sell America inflation. Sell America, but that doesn't align with small caps, This is the heart of America. Small businesses make up 48% of all employment in America. So I don't know if that necessarily aligns. I will say software stocks are dumping like AGI, like we just discovered AGI, right? So memory stocks are rallying like we discovered AGI. Software stocks are dumping like we discovered AGI. Data center stocks are dumped like the bubble's popping. Oil's trending down as if we're in a recession. So let's simplify this a little bit. Oil's dumping as have rate counts as if we're in recession. Treasury yields are up as if we're in stagflation. Small caps rallying like interest rates are zero. Gold and silver rallying like we're at war. Somebody says small caps are leading the soft landing golden age. Yeah, okay. And we just soft landed. Okay, all right. That's possible. That's possible, right? But then why would Microsoft be in correction territory, right? You would think everything would be going up and that treasuries would be coming down. So it's wild. Yeah. So, yeah, reconciling it is a little interesting. Because in a soft landing, gold and silver would be going down. Like we're at a war and recession is near, right? Small caps are rallying like interest rates are zero. We soft landed. I think that's valid. Somebody says we're in the last stage of the bull cycle. Metals, dividend, staple healthcare rotation have been confirmed. I agree. Hedge everything, not short everything. I like hedge. Okay. So I like cash. I like no debt. I like diversification. I'm not the biggest fan of hedging, but let's take this or this part, right? And let's see what Claude says about it. Somebody says, "Can Carney be our president too? What a statesman." Yeah, it's interesting because a lot of people don't like Carney, but I have to say, like, ignoring the politics of Carney, because I don't know that much about Carney and his politics and that, I have to say his speech was phenomenal. Phenomenal. All right, so I'm just going to paste exactly what I wrote there with no leading at all. No leading tell of what to do, what I want. I'm doing this on purpose. I'm going to put this into the AI, and we're going to see what the AI says, okay? We pay for good old Gemini Ultra. Have you seen the Gemini Ultra yet? See, look at this. Ultra. So we'll turn on Deep Think and Pro. And we'll go to Chat GPT. I have to say, lately, and I was only turned on to Claude by a good buddy of mine that I did an escape room with a few days ago. And he's like, "Oh, I've been really using Claude," because I was talking to him about AI. And I'm like, I have not given them a shot at all. So I tried it, and I'm like, that's pretty damn impressive, gotta say. All right. So ready? This is Anthropic. Let's go look at Anthropic's take on this, okay? The market's basically pricing in 4 different realities simultaneously. It's schizo. Let's go, dude. That's hilarious. I love that. Conflicting market signals across asset classes is what it wrote. And it's calling the market schizo. That's such a great word. The most coherent read I can make of it. It's a rotation story. Money is fleeing high multiple software SaaS AI disruption risk multiple compression and piling into anything with hard assets or perceived AI beneficiaries. Memory stocks get the AGI bid because they're picks and shovels. Software gets the AGI dump because they're the disruption target. Macro confusion. I mean, yeah, but this is what we already wrote, right? So that's not really insightful. Treasuries and oil arguably tell the truest story. Sticky inflation plus weakening demand. Stagflation light. Gold confirms this, but small caps rallying. Pure liquidity rate cut hopium that doesn't fit. Yeah, that's what I'm saying. Like, this is crazy. This doesn't make any freaking sense, you know? Microsoft down 20% on a business with those margins isn't macro. It's multiple compression from AI CapEx concerns. Is Copilot actually monetizing question? Yeah, but look at their freaking profits, bro. You know? Small cap rally is one that doesn't belong either. It's wrong and about to roll over, or the broad market is wrong about stagflation and we're actually soft landing. Both can't be right. I mean, yeah. Data center dumping post DeepSeek means if markets repricing the CapEx efficiency story, less spend needed, less revenue for hyperscaler chain. Yeah. Okay. All right. I mean, I don't know that this was insightful. I think it was more like telling me what we kind of already suspected, right? So let's now go to, somebody says, when does the coupon code expire? Well, the coupon code expires January 28th, which is my birthday. And the best way to get the best deal is make sure you join the Meet Kevin Alpha Report at meetkevin.com. Then use the coupon code BUNDLE to get into the ReInvestAI and lock in that lifetime access. I don't know how well I timed that. I don't have my headphones in, so I couldn't hear the audio. All right, let's see what GPT says. What you're describing is regime crossfade tape. Did they ever just make that up? Regime crossfade tape? What the hell is that? Different parts of the market are pricing in different horizons and different shocks. Here's one coherent way to reconcile the contradictions. Rates are doing two... Hold on a second, I gotta close the door. I hear all that screaming. Oh, I gotta love it when they're screaming. Rates are two different things at once, and that breaks everyone's narratives. The front end can be pricing easier policy. The long end can be pricing in stagflation vibes. Small caps rally and yields up. Splits between cuts and risk premium higher. You get small caps rally, long yields up without it being crazy. So it's arguing that small caps are rallying because we're pricing cuts in the short term, which is weird because we're about to pause, right? Gold and silver aren't only recession hedges anymore. Gold and silver doesn't have to mean imminent recession. It can mean I want insurance against geopolitical. That's fair. I agree with that. I think that's fair. I mean, that's what central banks are doing, so that's fair. Oil, consistent with nominal growth cooling. That's fair. AI is splitting into margin losers, picks and shovels. Data center consent. This is the super cycle, right? This is and memory goes through crazy cycles. Software dumping can be worried that AI compresses pricing and moats. Commoditization fears. Okay, I mean that's fair. I think that's fair. Data center dumping. Let's see here. Power constraints converge to landlords, builders struggling as the gold rush attracts well-funded competition. Okay, fine. CapEx intensity. I mean, that's fair. That's fair. Microsoft trading like this. Microsoft treated less like a quality defensive and more like a CapEx story. That's what Anthropic said too. Big AI infrastructure spend has been recurring investor concern. That's fair. That's fair. That's how it's sort of reconciling this. The common denominator. This is dispersion, positioning, market trying to price slower growth, inflation, and the AI CapEx race all at once. Okay. What would resolve the tape the fastest? Things to watch. Credit spreads plus unemployment trend, recession confirmation, which we're not getting. Unemployment claims, ADP, we're not seeing the cliff. The 210, we've got energy, AI CapEx. I'm not really sure this is really useful. It's basically saying, like, if a shock happens, okay, fine, that's old news. So what does Gem say? So Gemini, and then we'll stitch these together. So Gemini also calls it schizo. So Claude and Gemini call it schizo. And this is also referencing CapEx. So everybody's saying Microsoft is down because of the CapEx spend. And AI agents will replace human seats. Okay. So it's this bet that, hey, AI agents will do everything you need software for, so you don't actually need software. Agents will just do it. But that's interesting because, like, a really good agent company, in my opinion, is Path, and the stock has been slaughtered forever. Like if you zoom out on the week chart, this is just a scheisse stock chart, But the company is actually very cheap, and they're rebounding on their revenue. And they're trading for a 1.37 peg right now with revenue rebounding. I'm excited about their next earnings because I find this very, this to be a very impressive AI agent play. Okay, so here, data center, super micro crashed, stagflation versus reflation. Small caps are rallying like interest rates are zero. This is like the Trump trade. America first, protectionism, deregulation, ignoring the fact that high rates usually crush debt companies. That's what I was saying, right? That's exactly the argument that I made, that like high rates should be bad for small caps. Treasury yields are fears that tariffs and tax cuts will reignite inflation, keeping rates high. Gold and silver is a hedge against the dollar. That's fair. So I think we can reconcile this. Gold or oil due to cratering demand in China and Europe. Okay, all right. So let's now reconcile that thesis a little bit, right? So Microsoft, this seems to be CapEx fears. Gold and silver, this is geopolitical and dollar hedge. I prefer real estate, but that's me, right? Small caps pricing in rate cuts and deregulation. Treasuries, pricing in stagflation. Oil, reduced demand from China, Europe. Memory stocks, that'll be, the RAM super cycle, and then essentially AI agents take over, right? Software stocks, if AI agents do the work, you don't need software. Okay, we're reconciling this. And then data center stocks, this is like the Oracle CapEx fear. Like, it makes sense, but it doesn't really give you a clear direction, because I like this idea. I think it was GPT or Claude. One of them said they can't all be true, right? So I wonder if there's any historical comparison to this. So I'm going to say summary, and then, but the question is, any historical guidance / what's next? Seems like, well, I mean, can they all be true, right? Like, let's think about that question for a moment. AI agents, soft landing, and inflation. I mean, an inflationary, it could be like, really, it could be an inflationary AI agent takeover, an inflationary AI agent regime, right? That almost makes sense of everything. Makes sense of software down. I don't have to explain it. Let's just see what they say. While it's pending, I'm going to paste that into all of them. Okay, we'll let them run. So while that's pending, I mean, I guess it's sort of like, I mean, I don't really buy it, but it seems to be pricing an AI agent inflationary super cycle of growth. I don't buy that AI agents will be that powerful, but this would explain software down, memory yields up, and growth expectations up, inflation fears up. Right? That would kind of explain a few things here. This AI agent inflationary super cycle of growth. I think that's a good bottom line there, honestly. But let's find out. So somebody says robots are literally taking away a lot of jobs in my local hospital. What, like, I mean, I think AI, my understanding, okay, I want to hear your opinion, but my opinion is, in hospitals, AI is fantastic because AI can watch monitors better than a nurse can, who's going to pull out her phone and text, until the machine beeps. Now, you still need a nurse. I'm just saying. You don't have to sit there and stare at a freaking screen all day long, because the AI can do that for you. That's my opinion of like, and then obviously like diagnostics and stuff. There's some fantastic things you can do there. All right, so Claude says there's a historical parallel to 73 stagflation tech transition. Oh, that's interesting. Kevin, I have a question above. Could you give me your take? Well, given that your name is J. Powell Fed, I guess I may as well answer. Honestly, I don't see where your question is, though. You should get a custom HouseHack color themed leather jacket. That'd be sick. Just embroider this. I should just embroider this one, because I really like this jacket. I think I got this in London at a Hugo. I don't know where your question is, JPEP. I think I got this at a Hugo Boss store in London. Yeah, it's definitely Hugo. Yeah, be careful not to pull out all my guns. Doesn't really say. Oh well. So anyway, where were we? Okay. Let's see here. My husband is in oral surgery residency. All the residents use GPT to help them with diagnostics. Oh, of course. Of course, because AI has seen every single medical case under the sun because they study all of these. Like, it's the most, you copy pasted. I don't know why I don't see it. Is it getting hidden? Maybe reword it. Maybe there's a word that's hiding it or something. Like, I don't know because I can't see it. And I don't even see it as like moderated, hidden or whatever. But anyway, so YouTube might be hiding whatever you're asking. But anyway, yeah, every time, like all these medical cases get studied and written down and documented. So the amount of data that's available for healthcare and in AI to find patterns is fan-frickin-tastic. And it's really just good for healthcare. So I'm very optimistic about healthcare and AI. UiPath, for example, has a lot of exposure to helping healthcare companies with agents. I don't know, if they'll be the winners, but I do know they mentioned that. So during the 73 to 82, gold delivered 9% real returns, and the S&P 500 and treasuries had negative returns. Holy smokes. This is a return to the 1970s. Oh my gosh. Real estate provided 4.5% annually. How interesting. So real estate and gold provided returns while equities and treasuries had negative returns. So a 60-40 portfolio would have struggled mightily. Wow. Gold surged from $100 to $650 when CPI hit its peak. Well, also this aligns with Fed independence questions, right? This 1970s concern aligns with Arthur Burns / Fed independence questions today. I'm just going to leave that note there. Measured in gold, the S&P dropped 92%, bonds dropped 91%, housing dropped and measured in gold too. But it provided real returns, they're saying. That's it. I guess measured in gold, everything looked cheap. So gold did really well. This time it's layered with major tech disruption cycle. The AI thesis you're pricing in has real institutional backing. Pure seat pricing will be obsolete, with 70% of software vendors refactoring their pricing strategies around new value metrics like consumption, outcomes, or organizational capability. Okay. It's an interesting idea. AI. Okay. Key tension. Small caps don't belong. Something has to give. Small caps tend to have outsized negative impact from higher rates, mostly because borrowing is generally done through banks in floating rate vehicles, whereas large caps can issue fixed rate debt in public markets. Yeah. Treasuries are pricing in stagflation correctly if small caps are mispriced and the hopium is mispriced. Yeah, I would agree that for the small caps that's mispriced. So history says here's what happens next. Fed eventually picks inflation fighting over growth, and that's a recession. Gold consolidates but holds. Small caps crater. Resolution number 2, the Fed lets inflation run hotter. Gold and real assets win for years. This is the inflationary AI agents regime. Gold and real assets win for years. Wow. AI productivity miracle. I do not think we're going to have a miracle. AI-driven productivity gains actually offset inflationary pressures. This is the bull case that has no historical precedent. Wow. That's actually very interesting. Wow. Seat-based pricing gets hit. Small caps, if rate cuts don't materialize. Treasuries in the short term. Multiples without AI modes. Hook for your video. Who said I'm making a video? I didn't say I'm making a video. So I must think this from just like other context when I like, because I'll look at like, hey, what do you think of my video or whatever. Usually I it's not particularly useful because I just use current data and it doesn't know a lot of it, but sometimes it's kind of nice. Okay, so now Gemini says, based on the specific conflicting signals you're seeing, Gold and yields rallying simultaneously is a precise snapshot of the volatility of late 2024. So this is interesting. So Anthropic says we're in the 70s. Gemini says we're at Trump elected. Okay, interesting. Historical guidance. Oh, 19, not the 70s. So it thinks 40s, not the 70s. 40s, post-war reindustrialization. U.S. ran massive deficits to rebuild the industry. Feds could not raise rates enough to stop inflation. Result, nominal boom. Stocks and GDP went up in dollars, but inflation ate real returns. Gold is not hedging a recession, it's hedging fiscal dominance. That makes sense, because the government can't stop spending. Yeah, that makes a lot of sense. And then tech parallel of the 2000 basically era, so 1998, 1999, CapEx digestion phase, where you love the hardware, but you hate the bill payers until they prove ROI. Okay, what's next? Per seat human. This is like Adobe getting whacked, right? So like Adobe gets whacked on the per seat human, which is the same thing you saw over here. That's what they mentioned here. Per seat pricing. Headcount growth gets hit by companies shifting to consumption pricing. Okay. Okay. Preference for real estate. I did say that. Risk. Real estate's tricky and yields upside. Oh, because that's based on debt. Right, because of CapEx expansion. That's fine, because of debt. Better hedge. Gold and Bitcoin tends to outperform real estate in this specific phase because no maintenance cost exposure to interest rates. That's exactly why we have no exposure to interest rates, because I agree with that. I just can't get wedge deals on gold and Bitcoin. So in fairness, I respect that. Market is building an AI economy. Market is signaling that building the AI economy is inflationary, but using it is deflationary. Right. That's interesting. I like that. That's actually a really interesting bottom line there too. See, because it basically says, building AI equals inflationary. I like that a lot. AI agents equal deflationary. Hence software down, hence yields up. Kind of interesting, actually. We're kind of putting together a nice little thesis here. Huh. Very interesting. Okay, let's now try the response from GP. GPT says you're basically looking at 3 different clocks being priced at once. Cyclical growth, inflation, and the build-out. This is very similar to the telecom build-out era of the 1997 era. I mean, you've got something for everyone here. Picks and shovels can outperform until the market decides the ROI is questionable. Then the unwind can be violent. Right. Scarce component phase. Okay, we're gonna classic stagflation, guys. Now I'm just gonna play with this, okay? I'm gonna say to all 3 of them, answer only in months. How many months until recession? That's it. Just provide the number. Okay, that's it. I'm not putting in any other data. I'm not putting in the 10-2 yield curve. I'm not putting in anything. I just want each of them, and watch, they're all going to be at a different place. And then you're going to be like, all right, yeah, it's worthless. But I think it's going to be hilarious. Each of them are going to get the same thing. We'll put that away for a second. And then I'm gonna ideate on it in the meantime. So, when we look at this, we're pricing in the AI agent inflationary super cycle of growth. And this is I think the biggest problem. Okay, so the bull case, AI reduces costs at companies, market can rally as disinflation takes hold and Fed cuts rates, right? So I think that's reasonable. That's as a bull case. Okay, the bear case though. So the bear case is AI does it, like AI stagnates, leading to an OpenAI collapse example given, right? AI CapEx collapses, market tanks, leads to massive layoffs, right? That's obviously the bear bull dispersion there, okay? So in the bull case, winners here are companies that can save with AI. Healthcare is a great example, right? Winners in the bear case are going to be low rate beneficiaries outside of the stock market. So basically real estate and bonds. So real estate and bonds win here. Healthcare is a good example here. Okay. All right. Okay. So now let's go see. Okay. Claude didn't want to answer. I can't give you a reliable number. No one can. If you want a range for content, I don't care. Consensus models are scheduled between 6 to 18. Yeah, but that's always been the case. That's nothing. So that's dumb. GPT says 10. I'm going to go, why? All right. And then this one's still thinking. That's funny. Okay. While whatever this thing is called is deep thinking, let's just go look at the market really quickly. Where are the cues? 621. Okay. Still have that nice bounce off 617. That's pretty sexy. Won't the government print infinite money to ensure AI success? The government can't force the markets to love. Trump says, I will sue New York Times over unfavorable opinion poll. Dude, it's so much bullying, man. That's all it is. But what's it called? I don't know what I say. Yeah. I mean, sure, the government can delay the popping of a bubble, but it can't prevent it. So both GPT and Gemini are still thinking, and Claude pussied out. I shouldn't say that, but it did. All right. Interesting. So could that explain Salesforce down, Figma down? I mean, Meta, not so much, but to some extent, maybe. Oh, Duolingo is a good one. Yeah, look at that, dude. Full U-turn. Back to August of 24. What a round trip. Man, look at that. Imagine you bought it at $544. You're at $154 right now. Oh my gosh, 71% drop. Yeah, that's crazy. Let's make some more tea here. See, I've made it so that now I can be so lazy I don't have to get up to get my tea. I just got to cook that tea. Okay. Deep think is still deep thinking. All right, let's see what GPT says. Because the best widely used timing model, the 10-3, puts the 12-month recession odds at just 25%. 25%, that's very low. Cross-check. LEI is still declining. Slow down at 26. Doesn't scream right now. Labor market soft but not breaking, which argues against a near-term call. That's not super useful. All right. Let me use up all my deep think credits. This thing's still pinwheeling. All right. Now, let's go. Let's go see what's going on in the news while Deep Think thinks. Well, we're at 170, 172, 173, 174, 176. Just where we want it. I need another tea bag. All right. We'll go see what's going on out there. Nothing like green tea. Piping hot, but not boiling. Oh, done. Cool. All right. Now, let's go see what the news is. Did Gemini respond yet? 6. So Gemini says 6. Gemini says 6 months. GPT says 10. And Anthropic didn't answer. I'm going to say why. All right. Now, what do we have here? Zelensky blasts Europe for inaction countering Putin. Trump's NATO deal would mean U.S. mining and missiles in Greenland. Well, yeah, that's the point. Canadian jet firm profits by playing the bad guys in air combat. Okay. Mortgage rates inch up from 3-year low. Treasury slip as data supports Fed pause. Of course. No sovereignty talk. Stocks rise. Musk SpaceX lines up. They're going to IPO right at the top. Robots to public next year, like 2027. Gotta love Elon timeframes. Let's see here. Google lets users tailor AI search with data from photos. Email. Okay. The UnMAGA proposal to bring manufacturing back. Well, that's all boring. I mean, we'll look at them in just a moment, but it's pretty boring. What about here? Intel is now pricier than TSMC. That makes no sense. Momentum, baby. Anthropic lowers gross margin projection. That's interesting. Trump expedites deep sea mining of critical minerals. Oh, there's that deep sea mining stock. Yeah, by the end of 2027 for the optimists. Okay. Well, there'll be some interesting stuff to look at here. Let's see. Jared Kushner sets out $30 billion vision for New Gaza. Develop. Private equity, law firms, fine, Israel. All right, let's go see what we got. Let's go through some of these. So, and then I do want to see the Tesla piece here. So Tesla plans to start selling Optimus robots to the general public by the end of 2027. That's basically in 2 years. By then, it should be highly reliable with high safety. Trump sues JP Morgan for $5 billion over debanking. Political debanking. Oh, really? I wonder where that's going to go. Okay. White House has promised the Optimus, while Musk has promised the Optimus program is the future of Tesla. The company slashed production goals due to the hands and other technical issues. Musk said Tuesday Tesla is using Optimus for its simple tasks, hoping the robots could do more complex tasks in the future. That's it. Okay, so not a lot there. Anthropic. Oh, let's see what Gemini gave as a reason. This is derived from the convergence of historical clocks identified in your text. Treasury yields rallying. This is a bear steepener. So the bear steepener. Recessions rarely begin when the curve inverts. They begin 3 to 6 months after. Yeah, well, we've been uninverted for a while now. The uninversion marks the moment borrowing costs snap higher, tightening financial conditions as the economy slows. Yeah, but I mean, what's the 10-2 right now? Like, how long have we been uninverted? Oh, long time, dude. Look at that. Wait, no, sorry. The uninversion was right here. Yeah, it's been 18 months of uninversion. So, CapEx to layoff lag. Cut CapEx happening now. I don't know if that's happening yet. Freeze hiring and then layoffs. Okay, not sure if that's happening now. Cutting the CapEx yet. But so when that happens, it's saying there's a delay. If companies start slashing CapEx to protect margins. Okay. Oil leading indicator. Employment lagging, we know that. Roughly takes 6 months for manufacturing recession to bleed into the service economy. Right. And manufacturing has been in the poopy doopies for a while. All right. I mean, those are pretty generic cases. We've seen that. All right, bull market, RSVP. Show me your best chart. All right. What else? NATO deal. The deal that persuaded Trump to diffuse escalating tensions over Greenland. Framework deal entails stationing missiles mining rights aimed at keeping China out. We didn't go into those details at all. That was about sovereignty, right? Yeah. The Danes reiterated that you can't take territory. European NATO allies had introduced a proposal for an alliance-led activity focused on Arctic and Greenland. All right, so really no details yet. That's boring. No details. Yeah, we didn't put that back to work. Okay, mortgage rates inch up. So, surprised they didn't give us a chart on it, but that's okay. Treasury slip. Yeah, pauses for sure. Jan 28th, my B-day is going to be pause day, man. Pause. Ah, it's going to suck. We have not been able to regain where the Qs were at the beginning of the day, which is quite interesting to me. This perfectly aligned with our alpha this morning. And I went into this morning and I told everybody in the alpha, like, you know, hey, the market's up 99 basis points. I don't think people like stale tacos. I would not be bullish on the market this morning. I'm not sure. I did say my confidence was lower today than my confidence the last 2 days. But I said I would wait for a 617 bounce before doing anything today. In fairness, we got within 78 cents of that. So that wasn't bad in the alpha this morning. Which is surprising to me. But yeah, remember, if you want to be part of that, meetkevin.com. All right, trader expectations that the Federal Reserve will delay interest rate cuts until later were reinforced by data. I mean, that's fine. Fed can afford to be patient. Yeah, that's fine. That's not news. SpaceX has lined up 4 banks. Bank of America, Goldman, JP Morgan, Morgan. Interesting. Yeah. An IPO here would just be, I would love it because my venture capital company will make some dollars. And it's kind of exciting. SpaceX told employees in December it's entering a quiet period and it should refrain from discussing the IPO. Wow. Wow. I think my bet, Elon is rushing to do this before a potential recession. Elon is rushing for that exit liquidity before a potential recession. He needs the money for XAI, etc. So it's and to beat Sam. It's both. Yeah. All right. What else? So now we're going to hype up Optimus. We saw this at the information. Earlier this week, Musk cautioned that initial production of Optimus and Tesla's newest vehicle, the Cybercab, will be agonizingly slow. Well, that sucks. Like, I want a robot. Y'all see that Ryanair drama between Elon and Ryanair? I think that's kind of funny. Private credit investors are cashing out at Davos. Emboldened by the ouster of Maduro, the administration is searching for Cuban government insiders who can help cut a deal to push out the communist regime by the end of the year. Wow. Strongly suggest they make a deal before it's too late. Wow. The Trump administration has required the majority of Venezuelan oil to be sold to the U.S. China can buy the oil at fair market prices. Okay. Trump and his inner circle, many members of which have Florida ties. Yeah, like Marco Rubio. It's a regional hegemon. That's what you've got. All right, what else? Private credit. What is this? Cash out. A large number of individuals and investors are trying to get their money out of private credit. Well, yeah, I think private credit's, a little risky right now. Especially if it's like debt backing data centers, man. Oh, bleh. Like I still like private equity, cheap value private equity deals, but private credit? Nah, man. What's the upside for all that risk? Several of the biggest funds eligible to wealthy individuals receive requests of about 5%. So the biggest funds eligible to receive requests from about a 5%. Several of the biggest funds eligible to wealthy individuals receive requests from about 5% of shareholders to cash out at the end of last year. Oh, they're getting out. Well above normal volume. Yeah. Blue Owl got redemptions of 15%. Primarily from Asian clients. The Asians are dumping. Asians can be really smart, everybody can be really smart, but Asian private credit folks, seeing the writing on the wall, can make sense. Okay, democratize 401k, private fund managers. Analysts say there could be a simpler explanation. Investors are falling to a pattern of selling out when an asset class underperforms. Maybe. These investors get surprised when their dividends go down. Or private credit funds most heavily marketed to individual investors. Private development companies make high interest rates loans with junk credit ratings. Dude, they're risky, man. They're risky. So you're cutting dividends on a high risk investment. Of course people are going to freak out and be like, give me my money back. Of course. This is like pure logic. Largest private credit funds have declined 6.2% in the first 9 months of 2025. Wow. Declined to an average. Declined to an average of 6.2. Those are returns. Total returns. Oh, okay. All right. So the returns are still positive, but they're compressing. All right, whatever. Okay. The leverage Europe has over the U.S. economy, it's just going to be treasuries. Why did a couple come back to California? It's going to be treasuries. Millions of Europeans use Microsoft, American natural gas, and buy U.S. stocks. Enormous flow of goods and services. Tit for tat tariffs, selling bonds. There it is. Unsustainable debt trajectory. Totally agree. Totally agree. So we know it's treasuries, the service trade. How credible are those threats? Okay, yeah, we'll see. All right, what is this? After meeting in Phoenix and discovering they were both from SoCal, they plotted their return. So why are they coming back to SoCal? Nick and Katie. These are like the most American names you could choose. Grew up in SoCal, met in Phoenix. We always talked about moving back to California to be close to our parents and siblings. Oh, well, if you have family there, that makes sense. Everybody wants to live with family nearby. Is this what they got? This is cute. A little 1950s home. That's probably like, if I had to guess, 1959. Dude, it has a chimney cap. Let's go, bro. I mean, I see chimney cap. I see 1990s, late 90s, early 2000s dual pane windows. Those aren't brand new. The roof is okay. I've got a carport, so I wonder if they did an ADU in the garage. 1955. Oh, bro. Within 4 years. Let's go. That's pretty good, dude. That's pretty good. I got within 4 freaking years. Let's see here. No way, dude. What did I just say? What did I just say? I saw the carport and I'm like, I wonder if they converted the garage. Let's go. Can't take the real estate out of Kevin. This is why Kevin's startup is a real estate company. I love this shit. From one picture, boys and girls. One photo. All right. So... lack of insulation up here. I hate that part, though. That's going to be a hot summer. Oh, these are like different options or whatever. Yeah, townhouse. This is a lot newer construction, though. Yeah, 87. Why would they put this blurry crap picture in here? Cul-de-sac home. Oh, there's your newest home. Yeah. All right. So, oh, it's like a voting thing. That's why they're doing this. This one. Oh, everybody wanted the newest cul-de-sac home. That's funny. All right, I'm done with that. Let's focus on the market. Okay, so what else? FT didn't have anything interesting. Jared Kushner on Gaza. So Jared Kushner touted the amazing investment opportunities in Gaza. Oh, okay. We could rebuild Rafah in 2 to 3 years. Set out a $30 billion vision for rebuilding the enclave. Speaking at Davos, computer-generated images of the Palestinian territory. Let's build a free zone within Gaza, and then we have a Hamas zone. What? In the beginning, we're toying with the idea of let's build a free zone and then have a Hamas zone. Let's just plan for catastrophic success. Give us your money. There is no plan B. We're going to do it. Wow. I'm going to have to ship so many materials over there. Rubble clearance has begun. New Gaza can be rebuilt pretty quickly. Wants to bring the free market. Needs 25 billion of investments. All right. Well, it's going to be a little... You're going to end up going to vacation in Rafah. It's going to be like the new Mediterranean. None of the Palestinians are going to be able to afford to live there. But you'll have a vacation town. What the hell is this? The true danger posed by Donald Trump. Why did they do this? Is disturbing. They made him, this is like he's always riding a bear. Yeah, I don't want to see that. We don't need to see the Trump boobs. Davos Donald was conciliatory. Should be a relief. Greenland crisis holds lessons. One is that Trump will yield under pressure. Well, all it took was 1 day of the stock market going down. Another is that the president's pessimistic view of the world, his willingness to rewrite history has eroded trust. Yeah. Last, every falling out under Mr. Trump threatens to be existential. For Greenland, Europe was lucky. It got through the round because Trump chose to fight over a prize almost with no strategic value to America. What? Arctic. Greenland site for the Golden Dome. Blah, blah, blah. All right, whatever. This isn't fun. All right, what else? Musk, Optimus, we saw that. Anthropic. What was this on margins? Anthropic last month projected it would generate 40% gross profit margin from selling AI to businesses. Okay. That was, according to two people with Marlin, that margin was 10 percentage points lower than before earlier projections. Still a big improvement from the year before. Why? Because of the cost of running the models. Inference costs were 23% higher than the company had anticipated. Suggests they may be operating less efficiently than OpenAI. Both companies' reliance on renting specialized servers from cloud providers make it harder to generate a net profit. OpenAI announced ads. OpenAI has a margin projected, gross margin of 46%. Non-paying users make up 95%. Wow. Wow. 95% no pays. That kind of makes sense. All right, what else? Why do they want to change how LLMs think? Because so they can get ahead? Oh, streamlining what the model should be trained on. More curated data related to the task it's designed to handle. Sure. Yeah, that's fair. I mean, that's like what we're doing with the our AI for real estate. It's like we're not training it on stuff that doesn't matter. Just training it on real estate. The Metals Co. Canadian-based company, Pacific Ocean. Revised permit. TMC should be pretty excited about Trump's desire on minerals. This is all about permitting the exploration. All right, that's no fun. That we saw. Okay, what do we got over here? Federal prosecutors are crushed by Epstein files work overload or workload. Okay. What else? Let's go over here. Reuters. Davos, Musk expect to approve, right? OpenAI, Brett Taylor says AI is probably a bubble, expects a correction in the coming years. Moments ago. Yeah, that doesn't surprise me. He's probably being interviewed at Davos. Let me see where you saw that. Oh, CNBC has an article on it. Free market will ultimately determine where the value is. AI is probably a bubble that is causing smart money and dumb money to fund competitors at every layer of the tech stack. Sure. When everybody knows AI is going to have a huge impact on the economy across a range of industries and workflows, money is plentiful. At Davos, yeah. You'll see a correction and consolidation, but I don't think you can get innovation without messy competition. I mean, that's fair. AI is going to have a huge impact across commerce, search, and payments, but it takes time for companies to adopt. Yeah, we're at the beginning of the curve for the adoption phase. So that's for revenue, basically. Okay. Crime has dropped since the pandemic. Oh, that's good. Send more money. ICE detains 4 children from Minnesota school district, including 5-year-old. What? Five-year-old taken into custody by ICE. Huh? Is it because they arrested his parents? That's gotta be so scary. Detained in their driveway. Just as they were returning from preschool. Oh. The guy dipped. Well, I mean, somebody's got to take care of the kid. Another adult living at the home begged agents to leave the child with them. ICE refused. 20-year-old respond. They're not U.S. citizens, but have been following the legal process perfectly, from presenting themselves at the border to applying for asylum and waiting for the process to go through. Wow. It's crazy times. It's heartbreaking, actually. Anyway, so 64 bips on the 10-2. This is really relaxed. A lot. Look at this. This was that Greenland spike over here. Let me look at the last year. So the last time we had a big spike was actually at the beginning of the year. So we're solidly up on the 10-2. I mean, look at this. The 10-2 is just a really straight curve up. Now, I wonder if we could sort of like extrapolate that to when we actually hit 1.25. Oh, let's ask AI to do that. Okay. Yeah, let's do that. All right. Let's ask AI. So let's go back to our chats from earlier. And I'm just going to upload that image. I'll say historically, a recession seems to be evident when the 210 yield curve is at 1.25. Based on this trajectory, how long do we have to recession? Let's just see what AI says. Let me open up chat and Claude again. I'll go back to those conversations that I had. Market, add photos, slap that puppy in. All right, that's cooking. And then let's get Claude to cook. Claude seems to cook the fastest. All right. They're cooking. Wait. Oh, I didn't put that into I put it into the wrong chat for Claude. Well, let's see if it gives different answers. New chat versus old chat. All right. Cool. We'll let that cook. All right. Let's see here. Spending bills. That's boring. What's Axios up to? No, so I'll tell you why I don't use the 3-month and the 2-year. So the 210 is very useful because it really tells you rates, like short-term interest rate expectations, and then long-term market expectations. When you compare the 210, you're really comparing short-term rate expectations to ultra-short money market, like what's the Fed policy rate? So you're really just comparing the Fed policy rate to the two and looking for a gap between those two. It's useful for different purposes, but less predictable for a recession, in my opinion. So so all I want to know is an extrapolation of the pace, right? Here's Anthropic's opinion. We went from 0 to 64 in 4 to 5 months. I don't think that's correct. I don't think that's right. We were at 0 September of 2024 is when we hit 0. I'm going to say that. No, we hit 0 September 2024. Let's actually be accurate there, knucklehead. All right, let's try GPT. Okay, that's not even up yet anyway. All right, whatever. So we'll see if Anthropic can clean up its act a little bit. Let's see here. Bond market keeps the score. President wants lower rates. You know, we know that's not really happening. How is the metals co doing? Okay, still grinding up over here. TMC. In real estate, better bring new service and build simple bunker under house too. Yeah. You're talking about Gaza. Bunkers. Call that a basement. Now, I just want to send my money, my $1 million over to HouseHack right now so I can start collecting my 5%. Because $1 million times 5% divided by 360 on a banker's year, it's $138 a day. I'm doing nothing. Passive. You know, obviously until it converts, but the goal is that, you know, when we convert in the future, it's just prep for IPO. That's the goal. But, you know, we obviously can't make any guarantees on timing. AI is coming for cowboys too? What the hell is this? Murder rate is the lowest since 1900. Oh, let's go. We need more guns. Murders fell by 21%. Largest drop ever and likely lowest rate since 1900. That's pretty good. Wow, that's great. National Guard, Democrat-run cities. Violent crime was already falling to a decade low in Biden's final year, calling into question about Trump's policies. Extremely difficult to pinpoint. Yeah, whatever. I'm just glad it's going down. I don't like hearing murders. Okay, interesting. You're right. Let me recalculate. It took 16 months. I mean, I guess we're halfway there, right? Yeah, it's basically saying halfway there. So 15 months to go. Oh, we got until 2027. Let's go. Okay. So enough time for SpaceX to IPO. That's interesting. I mean, that would make sense. I guess, yeah, you don't even need AI to tell you this because you could just look at where we're 0 and it's basically you're 50% of the way there. So, you know, September of 2024 to now is about 14 months-ish, right? And you're halfway there. Wow. Wow. That is logical. Okay, so Gemini says 9 months. The bear steepening project momentum is moving forward linearly. It is. It's a straight line. You need another 61 basis points. Since uninverting approximately 9 months ago, the curve has risen. You're getting about 7 basis points per month. The 9-month forecast assumes the market continues its slow grind. However, historical recession dynamics are rarely linear. If the labor market breaks, the curve will go vertical, and the Fed will panic. In that case, you'll flash in less than 3 months. Yeah, that's true. That is true. But that's why I'm saying, you know, we just watch layoffs, and so far they're doing pretty well. Huh. Somebody says, where can one see their HouseHack shares? I forgot the site. If you invested in the very first round, it's Pulley. So search your email for Pulley. And if you invested in the recent bond round, it would be Core. That's Kore. So if you search your email for that, you should be fine. Somebody says there will be an exponential flashpoint. Guarantee it. Yeah, probably. How do you feel about the theory that SpaceX doesn't IPO, but it's bought by Tesla? No. Way too expensive, rearranging funds. Elon wants new money. He wants new money from retail, from you. And yeah, I don't think so. Okay. Now, GPT still hasn't answered. No problem. Bitcoin 89.3. Let's go look at Doomburger. Ooh, architect reveals Trump requested features. Man, they could have done a better drawing with Gemini. We're going to have a second-story colonnade that connects the White House mansion with the West Wing. Yeah, Upper West Wing, that's cool. Question about what the building can support structurally. Hey, you could always dig a basement and spend $2 billion like J-Pow. Don't make fun of J-Pow. I'm sorry. Planned terrace will feature a portico pediment. Honestly, I think what Trump is going to build here is beautiful. And you know me, I shit on politicians all the time. I shouldn't say that, but I dump on politicians all the time. But I don't actually think it. I think it'll actually look pretty good when they're done with it. I know it's freaky to see part of the White House get demoed, but of the things Trump does, this is one that I'm honestly least worried about. Like, if I had to list my Trump worries, it ain't what's happening to a part of the White House. So, minimum euros for investing in HouseHack. What's the strength of the euro right now? $20,000 to euros. 17,000 euros. Yeah, we've never done like really small. Like if you go to what's it called? If you go to what are those little fundraise websites? I forgot what they're called. Start Engine. That's it. You go to like Start Engine or whatever. A lot of these companies, they take like $100 and $200 investments. And I'm like, good Lord, how do they do this? What is this? Greenfield Robotics, 21 days left. That's fine. They always, these things close. So they raised $3 million with 1,700 investors. So this is 3,110 divided by 1717. An average investment of $1,811. Oh, that's not bad. $1,800. Revolutionary weed control. Yeah. Got to control those weeds. It's kind of interesting to mess around on here, though, and play around with this. Virtual reality lab. Minimum investment, $292. The investments are way lower over here, the minimums. Our investment being $20K as a minimum, we would not fit in. But, our average investment is probably somewhere around 25, 26. It's probably actually moved up. The average might be closer to 30,000 now because we've had a lot of really big checks recently. So it might move the average up. That's kind of interesting. So I don't know. Most funded. Let's click on most funded. What is this? This is closing in January. Raised 97. Wow, dude. These raise money. $2 billion valuation. $2 billion. And they raised $6.4 million. So what is this? Oh, they actually generate revenue. They say they're profitable. Led by Activision co-founder. Wait, who is this? Wait, invest in the company itself? Oh, this is Start Engine itself. They're selling their own stock. Oh, that's hilarious. I didn't know that. The very company that is running the investment to invest here is selling itself. That's interesting. I mean, I guess it makes sense if you've got a platform where you're going to, pitch investments. Huh. See, we need to create a competitor to Start Engine. That's what we need to do. and then you can get Kevin's no BS take on whether the venture capital opportunity is good or not. HouseHack will run it. Look at this. W Motorhome is raising money. Compact luxury motorhomes from Italy. Italian motorhomes. 76 investors at $240. They raised $126,000. I don't want to invest in motorhomes. Premium monocoque fiberglass shell. They talk about this in aviation too. Here are quotes from RV journalists and YouTubers. Well, I always feel like that word is so condescending, and then like I gotta like pinch myself and go, Kevin, you're a YouTuber. I'm like, oh shit. That's right. I gotta stop saying that. Anyway, okay, so why is GPT still not answered me? Whatever. So that's interesting. Somebody says, geez, Kraken Robotics isn't even $2 billion. Kraken Robotics, which has gone parabolic. Let's go find out why. Thanks for letting me get in on HouseHack. HH to the moon. Oh, thanks for saying that. Yeah, I kind of want HouseHack to do all of my ideas. Like, I don't want people to feel like if Kevin has a good idea, oh, is it part of HouseHack or not? Nah, man. HouseHack is like the proxy for investing in Kevin. That's my opinion. Is that a crazy thing to say? No, I mean, I think that's a reasonable thing to say. I think we have that in our disclosures, right? Anyway, so Kraken Robotics. Let me give you an answer on Kraken. Oh, shoot balls. I thought I had a breakdown on Kraken. Well, I'll go look right now. The difference between someone like you and Mr. Beast is Mr. Beast made his fortune on YouTube. You made yours before and then added YouTube. Oh, well, thanks for saying that. That's an interesting compare. I never even thought about comparing like that. Kraken Robotics. And I've got all the respect in the world for what Jimmy Donaldson has done. There's a sliver of me in a Mr. Beast video somewhere. I think it was the Circle Challenge in 2019. Okay, so Kraken Robot. I'm a finance guy, though. This is like, people who watch Mr. Beast aren't interested in financial statements, generally, as far as I'm aware. Okay, Kraken Robotics. Different worlds. Okay, all work areas. Let's put this in. Q3 Kraken Robotics. What's even this ticker? I don't know. Whatever. 122. But I also really love doing all the fundamental analysis we do because to me, every time you look at all these fundamentals, you really learn what works and what doesn't for companies. And then you know what's important for your own company's fundamentals, right? Like, I feel like every day I look at a company's financials, it's just, I learn more about like, all right, here's what it takes to run a good company, So I love that I look at financial statements almost every single day, and I don't get bored by them. Like, I still have fun with this. Let's see if we can have fun with Kraken, okay? So how much money is this? These are Canadian dollars. Oh, well, shit. I gotta stop saying that. Oh, well, shoot. That's basically worthless. So we got to start with that. This is thousands of dollars. So I have net income of 2.8 million Canadian dollars. So that's like $10. Okay, sorry, I'm just being mean to Canadians. I love Canadians. My wife is half Canadian. My father-in-law's all Canadian. We got good Canadian family. I feel like I'm allowed to say it. But I just want to be clear for those people who don't know, I love the Canadians. Well, Canadians and I go way back. I sunk my first boat in Canada. Net cash flows used in operating activities. Okay, negative over here. That's amortization. We got some depreciation going on. Changes in working capital. Net effects from acquisitions. Okay. Okay. Acquisition of 3D depth. So they acquired a company. Okay. Plant, property, equipment. They're blowing money on acquisitions and PPE. So that's $38 million. Okay. Proceeds from equity offerings. So they're raising stock. This is reasonable. They raised $100 million by selling stock, or Canadian dollars, in 9 months. So 100 mil CAD stock issuance in 9 months. Okay. Okay, that's fine. Sucked his first bone. No, sunk my first boat. I didn't own the boat. I blame the storm, not me. Anyway, assets. 126 mil in cash. Okay, so they've got the money in cash. That's good. Current liabilities, these are pretty good. These aren't bad. Lease liabilities, long-term obligations. They got plenty of cash. Plenty of cash to pay their bills. Plenty of cash to pay bills. Okay. That's good. And then if I look at product revenue and service revenue, well, they actually do make some money here. Thousands of Canadian dollars. So I got $31 million in 3 months. So they're making 10 mil a month revenue, Canadian dollars. Costs of sales are about 6. And then obviously they pay for their corporate expenses. OPEX is about 4.8 mil a month in OPEX. So that's why they, then they get some tax credits and stuff, showing a nominal income. Okay. Small player. And they're actually shrinking. That's interesting. Look at that shrinkage. Why did revenue shrink? Oh, because service went up. So product revenue went down, but service went up. Note 8. What's note 8? Disaggregation of revenue. Product sales. Product sales transferred over time. Contract balances. Timing of invoices. Uh-huh. I don't see much in these notes that are useful for me other than them saying they have contract balances that they have to bill. So, they actually, for how much the stock has skyrocketed, their revenue actually isn't that promising. So this revenue growth, services are helping them, but what do they sell? Kraken Robotics. They do... Oh, this is hard. Underwater robots. Oh. Yeah, this is way beyond my scope of knowledge. Sub-bottom imaging. So this is what, like LiDAR scanning the deep sea. I mean, that's cool, dude. But, you know, governments buy this kind of stuff. Researchers and universities buy this kind of stuff. I couldn't tell you anything about the sea-power batteries. What the hell is this? Oh, wow, that looks cute. Little AI-generated sea-power battery. Why do I want a subsea lithium-ion battery? Why do I want that? For missions underwater. What, so I get, like, my robot could go, like, butt plug in or something? Yeah, I don't know, man. I can't tell you the first thing about revenue growth at this company. All I can tell you is the stock's gone up. And on not very impressive revenue numbers. They're not, like, running out of cash, which is nice. They just did an acquisition, which is cute. So we'll see what happens, but yeah. Wonder if GPT ever got back to us. GP. GPT says we have 16 months. Which I think roughly aligned with Claude. Yeah, Claude says 15 months. So Claude says we have 15 months. GPT says we have 16 months. And Gemini says we have about 9 months. So basically, we're good for a little while longer. That's kind of funny. Somebody's asking me about ReInvestAI robotics. I actually have a an analysis that I did in the stock tab for this. Remember, if you join the Alpha Report, you get this. And then somebody donated $10. What's that? Check out American Homes for Rent. Yeah, they have the book values have compressed a little bit on them, and their dividends gone up. Probably because of this Trump drama. Because they don't really buy fixer-uppers that often. So their book value is only 1.6 right now. So yeah, actually, this downtrend could create a cheap opportunity if it keeps going. I think Invitation Homes might do that as well. Yeah, see, their price to book is 1.7 as well. These are usually at 2. But anyway, ReInvestAI Robotics company is moving from selling robots for restaurants and casinos to robots as the leasing service. Their income isn't great, and the only way they're raising money is by selling the stock. Their service rental revenue is down 24% year over year. They also operate a boba store. I don't know why. It blows my mind, though people like it on Yelp as a novelty. They bought a new office in Vegas, and they offered up to $100 million in May and more in August to relocate their headquarters. They lose money. They burn about $5 million a quarter, and they raise money. They do have almost no debt, though. So good cash that they could use as an opportunity if they use it right. If they go create more boba stores, that might be pretty dumb. Plowing money into new salaries as they move into robots as a service, part of the NVIDIA Connect platform. Short-term major momentum, fundamentals are uncertain, risk of dilution, risk of mismanaging the money that they've raised with like the boba store and stupid stuff like that. So I'm just saying, like, I have to say, isn't that kind of cool? Because we've got this whole list of stocks that we've analyzed and stuff. I actually think it's kind of cool that if you ask about a ticker that I've already analyzed, I could just click on it and go like, oh, damn. Well, there are all the answers for you. Is your stock course about long-term investing or momentum day trading? Well, there's a combination of both, right? So momentum day trading, we talk about in the Alpha Report. Like, for example, this morning, I'm like, I don't feel good about the Qs off the start. Wait for us to drop to 617. That's my opinion. Obviously, I have days that I'm wrong, and the goal is to have more days that I'm right on the projection. The last 3 days, we've been spot on every day. AMD rally yesterday, we called that before the market opened. The Qs, 617 before we do anything. That was accurate today, right? But then we also, like, all the fundamental analysis we do, I think is useful for that long-term vision of like, hey, like, sometimes we'll do an analysis on like Teradyne, for example. And people are like, oh, damn, I really like that. They go buy it. Or the memory stocks. They're like, oh, that's really good analysis. I'm going to go buy it. Right? Like, you don't have to copy what I'm doing, but you could use that analysis as a head start and then make sort of your own opinions on it. So anyway, all right. Remember, you can get that over at mekevin.com. You get a bundle code for the ReInvestAI if you want that as well. And that's all I got for now. I'm going to go. I got some work to do. So I'll see y'all in the next one. Goodbye, folks, and good luck.